Hello and welcome to Business Incorporated Live on Channels Television. Here's what's coming up in the next 55 minutes. Moody's cuts Kenya's debt rating after deadly protests wrecked the tax plans. And the Ghana Cocoa Board has ended its 6-year losing streak, posting 2.3 billion Ghana cedi profit in 2023. Plus, stolen crypto doubled to $1.38 billion in the first half of 2024. Great to have you join us. I'm Ladi Williams. Let's get a check on the markets now, starting with the metals market. We see prices edge higher today with spot gold that's the bullion, $2,371 per ounce. We see spot silver, $31.37. All metals there we track inching higher, but we see palladium that's staying above this $1,000 mark for the second time now, $1,018 per ounce, up 0.37%. It was below 1,000 for about 3 weeks, so we're seeing quite an impressive movement right there with palladium. Let's get a check on the oil market now. We see Brent futures that fell about 49 cents earlier, but it's still quite flat right there. At the time we tracked it, $85.79, about 0.02% marginal gain there from the loss we saw earlier. WTI, that's a U.S. grade, that's holding up at $82.35 a barrel, still above the $80 mark. Well, join us now to get a sense of what's driving sentiment in the market, talking about price action and price outlook, because investors are looking at a lot of data this week, and that definitely will drive prices in this market. We have Carlo Alberto de Casa. He's a senior market analyst joining me via Zoom. Great to have you on the show.
Thank you very much. My pleasure.
So we see investors are awaiting comments from the Federal Reserve Chair Jerome Powell and the U.S. June inflation data for further cues on likely direction of interest rates. What are you expecting, and how will this impact gold prices in the short term?
First of all, in the last few weeks, we've seen the U.S. macroeconomic data, which are progressively slowing down. This means that investors are now expecting the Federal Reserve to become more dovish sooner or later, and this sooner or later is probably going to be sooner rather than later. Moreover, we just had today we've seen some banks predicting the Federal Reserve to cut rates even by 200 BPS by the end of 2025. Anyway, the main scenario, which has been very difficult for gold, considering that the interest rate has jumped to 5.50 to the record of 5% last year. Now the scenario should progressively become more supportive for gold, and that's why investors are already betting on bullion. The U.S. inflation is progressively slowing down, and the Federal Reserve should follow the data which are coming, also considering the labor data last week, which has been below expectation. Yes, we have a big news yesterday, better on Sunday. There was quite a significant news for gold, which is we come from China, because the People's Bank of China, the Central Bank of China, for the second month in a row in June, did not buy gold. After 18 months in a row where the Central Bank of China was buying gold, in May and June, the Central Bank of China decided not to increase the quantity of gold they are holding. But at the moment, we don't know if this is a temporary break, or if this is they will start again. If they stopped only because the yuan is particularly weak against the US dollar. What we know is that once the news was released 1 month ago, the news that in May they stopped buying gold, bullion price declined by almost $100. Yesterday we have seen gold losing around $35–40 from 2,390 to 2,350. But what is important, as you were showing a few seconds ago, that the price did not collapse. The price tried to rebound. The price recovered 2,360 and it was trying to jump to 2,370. Overall, bullion remain lateral, and year to date, so from the beginning of 2024, is gaining around 15%.
All right, definitely. I'm sure investors will be wondering when the central bankers will start buying gold all over again. But talk to me about what you're expecting for rate cuts. Is it going to come this year? Because it seems that's the main driver for gold prices at this time.
From my point of view, yes. To be honest, it's a few months that I'm saying we have been too optimistic. Someone was expecting 3 rates cut, 4 or 5. No, I think we'll see only one, but we'll see in September. Okay, if data are moving like we're seeing this week, we can see 2. But we're talking about 1 or 2. I don't expect the Federal Reserve to move. From my point of view, rates are going to be at 5 or 5.25 at the end of the year, because anyway, the Federal Reserve has shown that it's very concerned about inflation. The only things that can change this is if we are seeing the labor market slowing down significantly. In this case, the Federal Reserve could be more dovish. But for the time being, I don't see, at least from my point of view, the Federal Reserve doesn't need to be too dovish, because they would like to keep some the possibility of further cutting rates later if needed. Anyway, this is talking about the Federal Reserve. The ECB, the European Central Bank, already cut rates last month. I think they will cut the rates another 2 times this year, and now European Central Bank is at 4.50, and Bank of England, which is at 5.25, I'm expecting to cut rates at the end of the summer, and to cut again in the final quarter of this year. So anyway, the trend is quite clear, and many central banks are starting to cut rates in the next few months. Overall, this is a positive driver for bullion, of course. Even if the scenario can be different if you're talking about gold and silver, because, of course, lower central rates are good news for gold and silver. But if lower rates are coming because the economy is slowing down too quickly, particularly for silver, maybe we can have a problem, because a significant part of silver demand, between 40 and 50%, is coming from the industrial sector, while the demand coming from industrial sector for gold is less than 10%. What does it mean? If the economy is slowing down, silver will be much more impacted. At the same time, if the economy is slowing down, investors are looking for safe haven, for a place where they can be relatively sure when they put their money. Gold can play its traditional safe haven role.
Having your perspective, that was Carlo Alberto de Casa, a senior market analyst. Thank you so much.
Thank you very much.
All right, and talking about gold and dollars and all of that, as Nigeria's external reserve hits a 13-month high of $34.66 billion after adding $1.88 billion as of July 4th. The responsibility of the central bank to stabilize the value of the naira becomes more obvious. Partner and head of the transfer pricing services practice at Anderson, Nigeria, Dr. Josh Banfo, says the managed floating of the currency is the way forward. Take a listen.
We are always going to be, as long as there's going to be some significant demand for Forex, we'll need to meet that particular demand in order for us to have a stable exchange rate. If not, there's going to be volatility. Anytime there's a surge in demand, and there's a shortage, then the price of the Forex then shoots up. That leads to high depreciation. So the first thing is for the Central Bank of Nigeria to have an understanding of the real value of the naira against the dollar. right? And that can be done, by looking at the purchasing parity value of the dollar. Then they need to have some level of commitment in terms of some reasonable range within which they can manage, the value of the naira against the dollar. If we don't do that and we leave it purely to market forces, where there's significant speculative demand in the market, which we've not been able to control, then we're going to be at the whims of, what the speculators do. Anytime they demand some significant amount of forex, there's going to be a significant depreciation of the naira against the dollar. And that volatility doesn't augur well for business planning. And as we all know, some of the reasons why some multinational enterprises have exited the economy is because of the volatility of the exchange rate and the fact that they cannot actually predict with some certainty and make any business plans, be it short-term to medium term.
All right, to our first conversation now. According to Henley and Partners, that's a research firm that focuses on residence and citizenship by investment. They're looking at opportunities right there in Africa. The reports ranked a couple of African countries to identify locations that offer the best ecosystems for future generations to maximize their career prospects and prosperity. And we see South Africa leading the chart there with about 30%. The wealthiest countries also illustrate how families from these nations can improve their life chances and future-proof the next generation through investment. And we see Nigeria coming in there about 14%. Egypt, third at 22%. When you look at total opportunity score by country, and we see Cote d'Ivoire also at 14 points. Ethiopia is the lowest there, 10% at this time. Well, join us for this conversation. Right now we have Emmanuel Nossum. He's a lead partner, Cardinal Professional Services Limited, joining me right here in the studio. It's great to have you.
It's great to have you, Larry.
Fantastic handshake. Been a long time, definitely, and we know everyone's looking for better opportunities. Even the birds, the birds, we know when they know the seasons have come for maybe drought or something, they end up flying another direction. And human beings are no different. So looking at this data, we see the likes of South Africa with an earning potential of about 41 points, career advancement 30 points, economic mobility, but we see Nigeria 22 points. When you look at the overall career advancement, just 9 points. So I guess that says a lot about the Japa syndrome that we're seeing.
Yeah, the truth, you want to agree with me that every human being is competitive in nature,
right.
And naturally everybody wants to move in the direction of opportunity. And I believe that's why this conversation is very, very important, because that report is actually something that I believe that the government needs to sit on and begin to reflect on how to make the environment more conducive for its own people, first to stay, and also to attract talent and investment into the economy. The Nigeria Opportunity Index, 14%, actually underscores some primary problems that we may be facing in the economy. Look at career advancement at 2%. That means the environment presents from the report, presents little or no opportunity to advance your career as an average person, and that is not far-fetched when you connect it with the average expectation of anybody coming out of the university. Everybody is just looking for how to get masters either outside of Nigeria or how to just get out of Nigeria so that they can have equal opportunity and get the best for themselves. So this is a report that I believe coming out from Ellen and Partner, just like you rightly said, that underscore the most critical aspects of the economy that government needs to look into if of a truth you must get the kind of results that you want to get. Let me tell you something of a fact. You may have the best policy, you may have the best strategy. If you don't have the best people waiting behind to support you with the deployment and implementation of your strategy as an economy, you are not going anywhere.
Right, and definitely talking about career advancement, another thing they looked at was the lack of access to premium
education.
Education. And you did mention, everyone trying to go and get a master, out of the country and all of that. So Looking at the body language, of this government and past governments, definitely we see that there's no attention, not much attention when it comes to education. And this is playing a crucial role, in this report.
Yeah, according to United Nations, one of the indices to determine whether an environment is going to be sustainable or going to be ever prosperous is how well the environment pays attention to education. Maybe for some political reason in the past, our political class may have found opportunities in under-educating our people or keeping them as illiterate, but it's time for us to rethink some of these things from a sustainable perspective as a nation, to say, if as a nation we must be prosperous, then one of the first things that we must get right is putting the right infrastructure in place to prosper education. You understand? Moving from the northwest to the northeast, down to the southeast, and then southwest, the education infrastructure has to be revamped for sustainability and for prosperity as a nation if we must strive. Right,
and definitely we're still struggling with minimum wage. At this time, and the kind of wage that we should
pay.
Potential. Yeah, exactly. So definitely looking at, this tussle between the government and Labour, and we still have that tripartite committee, trying to get that sweet spot when it comes to minimum wage. How much does this report rely on what they come up with, when it comes to the right minimum wage?
Maybe the frank conversation we need to ask ourselves is that how many people can really survive in the Nigeria that we have today based on the common minimum wage structure that we have, if they won't have to do any shady arrangement? You understand? And if you look at it, if you are not opportuned or you are not privileged to be at the avenue where shady transactions can come in your favor, then that means the environment is not attractive for you. And that begs a fundamental question about our environment. Our environment seems to be very relationship driven, where people access opportunity based on the people they know. And that is the underlying factor why many people are migrating out of this country, having evaluated the strength of their relationships. So if I look at the strength of my relationship and the assets that I have, will I be able to augment my income because I'm unable to earn a living wage? So they make a decision and say, let me go to an environment where the earning potential is a bit higher, and I can maybe on a merit-based basis earn some income that can actually put food on my table and give me some sense of living, even as a professional or as individual. So as long as we continue to keep our people at a wage level that is below the living wage, what we are telling our people is that if you don't have the right relationship that can help you access additional income, pack your bags and live to an environment that can give you a living wage.
Without relationships.
Without relationship. That is the reality. That is just the sad reality of our side. Nigeria is a relationship-based economy.
Relationships play out in other clients, but
not at the expense of merit.
Right.
Nigeria is an environment where, your friends will give you opportunity and show you the person that will help you to do that.
Quite interesting. But looking at where we are, at this point, does everything rely on what the government does, at this point? Because, we keep talking about the government has to do this, the government has to do that. And we know the Nigerian government, they talk about their own problems at this time, not enough revenue. Some say maybe it's not a revenue problem, maybe it's a spending problem. We need to look at where we're spending, at this time. Talk to me about how we as a people can actually make this happen.
On this particular matter, improving the opportunity index, largely, I will be very frank with you, the responsibility lies on the government. It is the responsibility of a government to make your environment attractive. You understand? Starting from policy, ensuring that, you have the right people to implement, policy. Statistic has it from MBS that Nigeria has consistently lose in excess of $10 billion to migration since 2010. You understand? You give your people almost free education at university level. only to allow them to go.
And I see most countries make a lot of money from denying us visas.
You understand?
Even from
So
denying
Nigerians visa, and
we lose a lot of money to that.
Look at the tax revenue that you have lost having not retained your people, and you migrated that tax revenue to another jurisdiction. Those kind of conversations are there, and the government has to, do something different to look at these several indices that have been measured and say, what can we do more pragmatically, to make this environment attractive? Maybe very little. The organized private sector can also do, something, but the organized private sector is a competitive sector. Investment will only move in the direction of opportunity. If I know that I will come and put my money in Nigeria and there's no experts available, all of them are in UK or Canada, nobody, I will then have to be securing expatriates to come and do the job at a very high cost. So all these indices...
So we're still sending money out and still importing everything.
Still importing everything. So everything largely lies on the desk of the table of the government to see to it that these indices that have been called out, career advancement, earning potential, quality of education, employment prospect, high livability, how easy for people to live in your environment, how safe, those criteria are those things that contribute to whether talent will migrate in your direction, investment will migrate in your direction, opportunities will migrate in your direction.
Now we need all of that migration to Nigeria, at this point. Thank you so much. Emmanuel Nassim, lead partner, Cardinal Professional Services, LLP. Always great having you on the show.
Thank you, Ladi. Thank you.
All right, we'll take a break now. When we come back, we head straight to the markets. That's the moment to stay with us. Welcome back. Let's head straight to the markets now. We have Anita Editor with the details. Great to have you, Anita. So definitely, we saw a blistering first half for the local bourse, over 30% gain, about 33%. But it seems the second half is starting off quite slow. Marginal gains for the month and for the second half of 2024.
Well, Ladi, I would say that it's too early to call because today is just the 9th day and we've had just about, if I would count right, about 6 trading days so far in the month of July. And of course, you mentioned that it started off in a negative. The negative is no thanks to, it was just a blip, 0.01% negative pullback for Monday's trading session, and this came largely on Transcorp share price pullback. Investors had some time to take profit there, but at the same time, we also saw some activities at the market where the NGX suspended about 8 companies for their failure to file their respective financial accounts for 2023.
Right, and you said it's too early. It's early days to judge. But I have comments from Professor Uche Waleke, and he said categorically that the second half of 2024, we're going to see a massive correction.
Okay, that's second half, but we were actually in third half. Okay, second half.
The second half of 2024.
Exactly.
Yeah, he's saying massive correction is coming. So who knows? Maybe it's going to happen.
But I'm actually looking out for, first of all, starting off the month before you now talk about the second half and then the third quarter, because all of this come into play. Let's not forget, yes, you mentioned this, so far, Nigeria stock market is still the best performing stock market on the African continent. And of course, there's still so much issues that can drive that uptrend, because don't forget, it's the era of capital raising by banks, as well as some other market fundamentals. We're still going to expect a flurry of activities which will drive the market. So I think maybe most likely we can
see
put
if
that
Professor
aside.
Uche Waleke is right. We'll definitely find out.
Only time will tell.
Only time will tell.
All right. So now let's talk about the intraday market numbers. For intraday, we saw the NGX pull back from the 100,000 points, which it closed on Monday in the red, and then still picking up from that Monday's downturn, and 0.13% the last time we tracked the market at 99,879.88. And for the South African market, we see there in the positive, Nigeria stock market was the only laggard there at intraday, where we saw South Africa's stock market 0.07% in the green at intraday. On the other side of the market, we see intraday numbers for EGX as stock exchange. That's the EGX 30, 0.03% uptrend, and the Kenya Stock Exchange for Monday, 0.86% in the green. Now, that is for the Nigerian stock market. Now, we were talking about the capital raisings before we get to Middle East market. So, so far, we've seen lots of activity from the banking space of Nigeria's financial market, where we see lots of capital raisings on the sides of public offers as well as rights issue. So now let's talk more about this, and we have Larry Bluro, the Managing Director, Capital Markets at Chapel Hill, to drill more on this issue as well as some other issues relating to capital raisings. Thank you for joining us, Mr. Larry Bluro.
Hi, good afternoon, everyone. Thank you for having me.
Okay, it's a pleasure. Now, let's start first. We've seen, we seem to have entered the era or the season of capital raisings by banks. First, we saw a couple of weeks ago, Fidelity Bank targeting 127 billion naira. Then just yesterday, GTCO announced that they seek to raise about 400 billion. And today, as we speak, we're seeing Access Bank targeting 351 billion naira rights issue for its investors. Now, can you tell us what is the specific opportunities that the banking sector holds for investors within the Nigerian market?
Thank you. I mean, as you're aware, the president of the country did mention, for us to have $1 trillion economy, our banking sector needs to be equipped and well prepared to support that growth. And on the back of that, we saw the CBN governor, push out policies around bank recapitalizing their balance sheets. And we've seen numerous announcements in the sector. You've mentioned a couple. We launched the Access Bank rights issue yesterday for 351 billion. And the opportunity is quite immense. I think it's a good time for the economy, a good time for investors, particularly, the banking sector investors. These are already very liquid companies in terms of listings on the exchange. This will further deepen the market. These are strong banks. The history of banks in Nigeria, particularly listed ones, they pay dividends. They trade. And I think it's an opportunity for investors to deepen their ownership, particularly around the very strong banks that are in our markets today.
Okay, so now you mentioned something about the Access Bank, which is actually the signature of ICE as we speak. And Chapel Hill Denham has built a strong track record of raising capital in the Nigerian capital market. Now, can you tell us, as a leading issuing house on the Access Holdings right issue, how do you think this transaction will impact the markets?
Oh, it will. I mean, Access Bank is the largest bank in Nigeria by balance sheets, also the largest bank by customer base in the continent. They've been investing into the business over a couple of years. As you know, you've seen various announcements around their entry into other markets in Africa. They also have different verticals in pensions, in payments. This capital raise just helps consolidate that and further those investments. To be quite clear, just to announce to the audience, Access has been raising capital irrespective of what the CBN had announced for the sector to do. So they're really in line with what the regulator wants the sector to be. If you also recollect, they actually announced their capital raise before the CBN announced the sector-wide capital raise. So this just further consolidates what their plans have always been. Again, I think as a brand, given what they've done in terms of innovation, in terms of products they brought to the market, this capital raise, we expect, it will be successful. And I think, as we mentioned, this opened yesterday, will be closing on August 14th, and we look forward to the support from their shareholders, which, by the way, is very, very diverse. We have a domestic pension funds who are very strong holders in this brand. Foreign investors are also shareholders in the bank, and a very, very deep retail base, which they've built over the last 30 years. And in our engagement so far, the feedback has been very positive, and this is going to be well supported.
Okay, so far, I would mention that we've had so far 2 tier 1 lenders approaching the market, and then 1 tier 2, which is almost attaining a tier 1 status. Now, what other banks do you see approaching the market within the second half of 2024?
Again, everyone has indicated what their plans are. we are aware of, another tier one bank. I mean, the brand was at the NGX yesterday announcing their upcoming transaction. They're another tier one bank which we're working with very closely. We know they are going through the regulatory process, and that also be very, very imminent. So very likely you might see all the tier one banks and two tier two banks possibly open within this window by Q3.
Okay, so thank you so much, Mr. Lanre Buluro, Managing Director, Capital Markets at Chapel Hill, for that information on the bank's capital raisings. Right. So now let's talk about the Middle Eastern markets, where we see mostly positive movement at intraday, because we had a positive there. But at intraday, we saw the markets all having their eyes on the Saudi Aramco's dollar-denominated bonds debut, which the offer begins today and is set to conclude on July the 17th. We've seen, first of all, the state-owned firm is making its return after a 3-year hiatus, where it initially had raised about 6 billion naira from a 3-tranche sukuk, or what you call an Islamic bond. So this is the second time in 3 years that Saudi Aramco will be coming to the market for a bond offer. And talking about the market, where we see a 0.05% for the Abu Dhabi and a 0.13% for the Dubai FM, both on the United Arab Emirates. On the other sides of the market, we see Saudi Arabia, which we talked about there, 0.16% at intraday. And for the Qatari Stock Exchange, 0.02% at intraday at 10,158.86 points for that market. Now let's flip over to the United States, where we see stock futures rising slightly after the S&P 500 as well as the NASDAQ hitting a fresh record on Monday. So for the futures, which opened just today, the Dow Jones Industrial Average still tracking that positive close on Monday, 0.12% at 39,000, almost at the 40,000 level, which is quite a historic high. For the S&P 500, way past the 5,000 level at 0.25% for the futures, and for the NASDAQ tech heavies, 0.40%. Now, first of all, the markets will be eyeing, the investors are eyeing 2 key inflation reports. First is the Consumer Price Index, which will be released on Thursday, and the Producer Price Index will be released on Friday. That's on the economic side. But for the corporate news, the market earnings reports will be released by PepsiCo, Delta Airlines, while bank earnings, which also will be expected due out on Friday, will be from Citigroup as well as JP Morgan. So this is how it ended. This is how it begins for the U.S. market, but we'll get to see how it closes the day for Tuesday. So, Ladi, if time may permit, maybe I could talk about the Asian markets.
So much at this point, investors in the U.S., all they want to know is when are they going to get the first rate cut? The first rate cut in 2024, and definitely we've seen the Fed, push that, back forward. But trying to let them know, just relax. When it's time, we're going to cut. We don't want to cut too early, but we know how investors are. Thank you so much, Nieti, for the details right there. All right, now let's take it on to Europe now. We see the first session of UK's newly elected House of Commons. That's supposed to be held this afternoon. Joining us now is DW correspondent Chipondo Chimbelu right there. Great to have you, Chip. So talk to us. What's going to be the main economic priorities for this new government?
Thanks for having me. Ladi, the Labour Party's landslide victory is seen as a rejection of the Conservatives, and a lot of that has to do with the UK's economic development in recent years. Now, turning the economy around will be a major priority. Some of the incoming government's plans include setting up a publicly owned green energy company. British citizens have been struggling with high energy bills, which have also contributed to the cost of living crisis and rising poverty in the country. So Prime Minister Keir Starmer's government wants to lift a ban on onshore wind farms to increase energy production while fighting climate change. They are also planning to build more homes to tackle the housing crisis and a new industrial strategy to spur production. But there are some areas where the government is planning to keep things as they are. It has committed to maintaining the current level of taxation, and Starmer's government also wants to reduce net migration to the UK. Now, that is something that would be expected of the Conservative Party. Internationally, one of the main goals will be renegotiating the Brexit deal with the EU.
All right, talking about the EU, can we expect the new UK government to realign with the EU?
Well, the consensus is that the UK economy is worse off today than it was before Brexit, according to Britain's National Institute of Economic and Social Research. The size of the British economy has reduced by 2 to 3% since Brexit. So, of course, there are many people who believe that realigning with the EU is imperative for the UK to improve its economy. It would remove some of the trade barriers we've seen post-Brexit, and that would help improve the economy. The new British Foreign Minister, David Lammy, traveled to Berlin last week to meet with Germany's Foreign Minister, Annalena Baerbock. Now, that might be a signal that the UK government wants to reset ties with the EU. The main priorities will be a veterinary deal to reduce paperwork and border checks on animal products, and mutual recognition of professional qualifications. And the Labour Party's manifesto also calls for a new UK-EU Defence Pact. Experts expect the European Union to be more receptive to attempts to increase security collaboration than efforts to change the economic terms of the Brexit deal. Brussels may want the UK to rejoin the customs union as a concession. But whether Britain is willing to do that, of course, remains to be seen. And what is clear is that it won't be easy for the UK to get everything it wants from the EU.
All right, everything it wants. But what can we expect from the markets in Europe today?
Well, Laddie, European markets are expected to be mixed today. Investors are waiting anxiously for U.S. Fed Chair Jerome Powell's appearance at a congressional hearing. Now, he will be answering questions from senators on the banking committee, and investors will be listening in for signals of a potential rate cut. The latest jobs data shows that the U.S. labor market is cooling. And in terms of news, investors will be watching developments at the NATO annual summit in Washington. Ukraine will be in focus alongside U.S. politics. There's still uncertainty over whether U.S. President Joe Biden will remain the Democrat nominee in the presidential elections in November.
Right, all eyes on the Fed and all eyes on politics right there in the U.S. Thank you so much, Chibona Chibelu, with the details there from Europe. To other stories now, see a message from Federal Ministry of Agriculture and Food Security shared on its X handle. That's for President Bola Ahmed Tinubu's media center. It suggests that President Bola Tinubu has availed some measures to overcome high food prices across the country. The measures include 150-day duty-free import window for food commodities, suspension of duties, tariffs, and taxes for the importation of certain food commodities. That's through land and sea borders. These commodities include maize, husked brown rice, wheat, and cowpeas. In addition to the importation by the private sector, the federal government will import about 250,000 metric tons of wheat and 250,000 metric tons of maize. Definitely, at this point, is a battle against food insecurity, and we're seeing the government trying to make some moves right there. To other stories in Kenya now, we see Kenya's credit rating that was cut deeper into junk by Moody's ratings after deadly protests that forced the East African nation to scrap a plan to raise more than $2 billion in new taxes. We see the youths resisted that move. The credit assessor reduced Kenya's rating one level to CAA1 from B3 and maintained its negative outlook on the country's debt. Moody's also says the company doesn't expect the government to introduce significant revenue-raising measures in the foreseeable future, given heightened social tensions. And also, still in Kenya, we see Kenyans spent 27.82 billion shillings, that's about $218 million, on importing second-hand clothes. It's called Mitumba. In the year to March, that's about a 33% rise year on year. According to the Kenya National Bureau of Statistics, this was a blow to President William Ruto's policy aimed at reducing such imports and boosting the sale of local garments. That's according to the government. And to West Africa now, the Ghana Cocoa Board has ended its 6-year losing streak following the restructuring of cocoa bills worth about 7.9 billion Ghana cedis. The cocoa regulator posted a profit about 2.3 billion Ghana cedis in the 2022-2023 crop season after posting losses of 199 million Ghana cedis. And now let's get a sense on the commodities market now. Let's look at the vegetables market. We hear people are exploring substitutes for tomatoes at this time. Let's look at carrots now. We see in recent times, we've seen the price of carrots has spiked from about 200 naira to 500 naira for a bunch. That's 150%. Everything is going up at this point. Well, it's a significant increase, faster than food inflation rate. Joining us for this conversation is Emefiene Onyelukachukwu. She's from FDC. Great to have you. What are the reasons for this surge in carrot prices?
Thank you, Ladi, for having me. The reason for this price increase include 1, declining yield per hectare. Currently, Nigeria's yield per hectare is low. This is as a result of rudiment farming practices. Also, we have post-harvest losses. Post-harvest losses is estimated at about 40 to 50%. And when you think about it, this is half of what is being produced. Basically meaning that half of what is being produced is going to the market, which will add further pressure on prices. 3, insecurity. The major producing carrot states in Nigeria are from the north. This includes Plateau State, Kaduna State, Kano State, and Sokoto State. As a result of this insecurity, you find out that these farmers are very scared, so they do not go to the farm. Therefore, supply will reduce, also causing this price increase. Also, we now have logistics, and then we have the recent trend of people using carrots as a substitute for tomato, which is also increasing the demand for carrots and making price high.
So I guess the problem now is if you identify the substitutes, there's a risk that the prices of those substitutes will actually go up. Because I remember a time, if I want to buy carrots for like 200 naira, the guy would give me a lot of pieces. But now I'm begging for more at this time. What do you think can bring down the prices or, give some kind of affordability?
Okay, yes. In order to bring down the price for this carrot, make it more affordable, first of all, the government has to try to address these insecurity challenges in these major producing states. When these insecurity challenges are being addressed, then you can see that there will be more production. Also, the government also has to provide incentives to subsidize the price of modern equipment so that these farmers can have access to modern equipment to improve on their farming. Then thirdly, carrot is a perishable commodity. Therefore, and also we don't have adequate storage facility. The government has to also come in to put measures in place in order to improve on the storage facility, in order to also improve on the government has to put these storage facilities in order to preserve the lifespan of these carrots so that when they get to the end users, it will not spoil.
Right, definitely. And I wonder what the next substitute is going to be at this time for tomatoes. Have you identified a new candidate that might become another substitute at this point? So we buy it before the price goes up.
I think currently, once on social media, you can see that people are also using watermelon, and they're also using pawpaw and then cucumber as a substitute.
Wow, I guess at this point, our stews are evolving, and our taste buds. Thank you so much, Emefiene Onyelukachukwu. Thank you so much, analyst with Financial Derivatives Company. Thank you.
Thank you.
All right, let's go to South Africa now. See, despite 100 days without load shedding, South Africa's Ministry of Energy and Electricity identified energy poverty as a significant challenge for consumers struggling with high costs resulting from tariff increases. The issue arises as Eskom recently celebrated 100 consecutive days without load shedding. Electricity and Energy Minister says the municipalities across the country still owe the utility just over $4 million. It is believed that this debt could double by 2050, where we could see Eskom owed over $165 billion US. All right, let's get a check on the crypto market now. We see red, pockets of red again just like yesterday. So it seems the sell pressure from most of the governments, especially Germany, we see that's not really winding down yet, because we're still seeing weakness with Bitcoin's price. But Ethereum, on the flip side, just like yesterday, Ethereum is still managing to stay afloat at this time, 1.1% up. Then we see major pockets of red also on the screen, going by coin 360 at this time. All right, let's get a check on the headlines right there. And the market, looking at ETFs pouring in. We're seeing those ETFs that had a couple of outflows, millions of dollar outflows. We're seeing some inflows at this time. So could it mean Bitcoin, those investors might be buying the dip at this time, because we saw about $438 million going to the US ETFs in the past trading sessions right there, a big gain of $438 million. And this is also happening when we see the German government offloading Bitcoin and at the same time buying up some Bitcoin. So all of this leading to uncertainty. The surge in investment comes as a time where cryptocurrencies have faced a decline of around 20% since early June. Then we see stolen crypto, that's doubled in the first half of 2024. About $1.4 billion that's been lost to hackers, according to analysts at a cryptocurrency analytics company, that's TRM Labs. According to the report, the total amount of money that hackers took from January to June 2024 more than doubled that of the previous year over the same time period in the first half of 2023. So definitely you have to keep if you're holding cryptos, you need to keep it really safe at this time. All right, let's go to my next conversation now. Normally we talk about CSR as it relates to traditional companies. Let's discuss prospects for corporate social responsibility in the crypto industry. Joining us for this conversation is Adedayo Adebajo, is a co-founder, ICP.Hub Sahara. Great to have you on the show.
Great to be here. Thank you for having me here, Ladi.
All right. So, do you see crypto companies, globally and back here engaging in some kind of CSR?
Yes, absolutely. I mean, prior to the time that we had the issue with Binance, there was something in relation to CSR when it comes to Binance, which is a crypto company, a global crypto company, so to say. And this is in relation to education and, of course, harms given as well to countries where this sort of support are required. But even aside from that, let's look at the potentials of using the technology behind cryptocurrency itself to enhance CSRs as given by organizations and all. It's, alongside with, when in comparison with the traditional method of delivering most of all these arms and support to nations, to states, how transparent are they, how efficient are they, and can they be automated? Can the reporting be balanced? And can it be done in real time, among some other things, which is where the use of the technology behind the cryptocurrency actually comes in, making it easy to do most of all these activities, making it easy to automate, making it easy to actually audit, and then existing proof of origin, among some other things, making it possible to do all those corporate social responsibilities in real time with efficiency and, of course, cost reduction, among all. But when it comes to the crypto industries and the crypto companies, yes, a lot of them have participated in a lot of CSRs, which can be verifiable, which can be verified on the blockchain networks.
But with the bad rep, some of these cryptocurrencies have, when it comes to regulation, doesn't it hinder, crypto companies from actually doing some of this CSR?
Yeah, so the regulation aspect, I mean, a lot of crypto companies actually shy away from where there are no regulations, because it limits their mode of operations or what they can do in those particular regions. But when you look at companies that are quite open to government regulation, and they are willing to also have deliberations with the government when it comes to regulation of crypto assets and digital assets, so they make it open and they make it possible to also support those governments, as it's seen during the time of war in some of the regions around the world. And also, we also witnessed something similar to that also in Nigeria, when Binance supported education of training of developers, among some other things, which came from their own budget, from the CSR budget to support African nations.
All right, so do you think maybe the government can do something to make these companies actually feel the need to carry on, with CSR, even though we know regulating cryptocurrency is definitely not easy, but we're seeing plans there to tax some crypto exchanges, at this time. What are you seeing for crypto regulation right now and taxing crypto? Is it going to be easy?
Yeah, it's actually doable. Let's say a year, 2 years back, or 3 years back, let's say the traders generally would think it is highly impossible to do. But seeing how the government have laid a lot of emphasis and some rigid control over existing crypto companies, Binance, for instance, Bytebit and all. And right now they have an understanding with KuCoin to have taxation for every Nigerian trading on their platform. So this is actually doable, and then it makes it also possible for them to request for them to be corporate socially responsible to the people that are actually using their platform, or probably to even the regions where majority of their customers are coming from. So this is actually something that is doable. Only if the governments are willing to step up, but not to stifle the regulation, but to make it very, very easy to do.
Right, don't stifle. Definitely, we'll see how regulation goes, because definitely we were talking about regulation from 2023 and it's still right here with us. Thank you so much. Adedayo Adebajo is the co-founder, ICP.hub Sahara. Thank you so much.
My pleasure. Thank you very much for having me once again.
All right, that's the show today. You can visit channelcv.com for more updates. You can also watch this again on our YouTube channel. I'm Ladi Williams from Media Team right here at Channels HQ. It's bye for now.